On manufacturing productivity, fourth quarter preliminary, we're up 1.3%. That's much better than the 0.75% average from the fourth quarter of 17 to the fourth quarter of 18. So that's pretty good. And on the November trade balance, expecting a minus $54 billion, a little lighter than that, minus $49.3 billion, sequentially following a very slightly revised minus $55.7 billion. So we haven't gotten some of the service numbers with productivity or unit labor costs, but at least we have some data. Back to you.
All right, Rick, thanks. Steve Leisman is here. So, Steve?
Yeah, I mean, this is good for fourth quarter GDP growth if the deficit was smaller. We'll see if it ends up taking away from other places, the trade deficit, that is. The productivity numbers such as we have are good. And overall, I continue to look for the recession the market predicted in December. Now, the market, it's kind of like a truth and consequences game. The market gets scared about a recession or whatever in December. That doesn't show up in any of the data we get in January. The result is it, in part, forces the Fed to change policy. I'm not sure that was wrong that the Fed would change policy, but not for that reason. I mean, I don't think that you have the slowdown. We're tracking now in the 2.3, 2.4 area for the first quarter. Actually, we're not tracking it. We don't have any data. But if these car numbers come in well, I mean, so we got to wonder, is that, and I'm fascinated to hear what Barry has to say about the outlook for earnings, because I hear a lot of pessimistic stuff that maybe we're going to do zero in the first quarter. No?
I don't think it'll be anywhere near that. I think we still have.
But you hear those numbers, right?
Absolutely.
The people are saying goose egg, right?
That is what people are quoting, and I think it'll be much higher than that, in large part because you still have strong revenue growth, and there's so much operating leverage. Look at the industrial sector, for example, 8% revenue growth in the fourth quarter, 20% earnings growth. Unless revenue growth falls off a cliff, and that seems highly unlikely given the data, the limited data we've seen.
So Bob Pisani yesterday at the news meeting, I don't know if I should say